Hi, everybody, and welcome back to the BizBeat by SVA, where we bring business owners the news and insights that actually matter to your bottom line. I'm Lee Schwartz, Director of Business Development and Sales at SVA, joined as always by Eric Trost, Tax Principal, and of course, SVA's President. Eric, how you feeling this week?
I'm feeling awesome, just like last week.
You were feeling awesome last week. You were on a roll. All right, but listeners, before we jump in, I just want to remind everybody, if you want to stay ahead of the OBBBA game, the One Big Beautiful Bill Act, stay ahead of the changes in that bill, please visit sva.com/OBBBA. Remember, that's 3 B's in there. That's where we post plain English updates, FAQs, event registrations, past webinars, all those types of things. So go there if you're looking for information on OBBBA. But Eric, let's jump into our first topic today, which was an executive order that President Trump put in place last week, I believe Thursday. And it talks about the possibility of adding private equity and alternative investments into retirement accounts. Talk to us a little bit about what that executive order is, and then we can talk a little bit about maybe what the outcomes of that might be.
Right. So this is an interesting executive order that he signed, but I'll give a little background on it, and it has to do with how laws are governed and what regulations are in place to oversee retirement accounts. And so within your retirement account, your IRA, let's say, or your 401k, you may have noticed that you can only invest in certain things typically that you get a choice for. So if you go and open an IRA with a bank, or if you go in your company's 401k, you'll be given options. It can't be just anything. You can't invest in your neighbor's real estate. You can't invest in crypto. You can't invest in sometimes in gold, depending on how you hold it. So there's all sorts of restrictions on what you can invest in. And where those restrictions come from is there's general guidelines that are given by the government saying, hey, you can do this and you can do that, or these kind of assets or not these kind of assets. And then every institution that holds these assets or allows you to open the 401ks and the IRAs at, those institutions then put in those restrictions and then give you, here's the options that you can do. And it's generally much more limited than what you can do on your own. You can just open an account and do these things on your own. You can invest in crypto. You can invest in real estate. There's nothing stopping that. It's these regulations in place that stop you from doing it because the assets are in a retirement plan. And those fiduciaries that hold these assets, those companies that allow you to set up these accounts, they're governed by these regulations. And if they allow the wrong kind of investment, they open themselves up to lawsuits. So in other words, you can sue them for allowing investments that maybe don't meet those regulations and standards. So those regulations and standards are interpreted pretty tightly by the companies that open these accounts because they want to make sure they don't get sued if something goes bad with those investments. What Trump's executive order has done is it's loosening, and it's asking essentially the ERISA, the boards that govern these, the federal agencies that govern these, to look at the rules and allow for these kind of alternative investments. So somehow this is going to have to get filtered in now. And really what I think is going to happen is that these companies are going to be less prone to lawsuits that allow you to have the IRAs and the 401ks. So when you go to them, you actually might get more options now, which include cryptocurrency, include real estate. Currently, you can invest in real estate, especially in self-directed IRAs. I've seen many folks do this, but what they have to do is they have to find a company that allows self-directed IRAs to invest in things like real estate, which means they're not traditional fiduciary type companies. They're not like the BMO Bank, or they're not UBS. They're not well-known, big established investment firms, but they are very small. I'll call them pop-up type fiduciaries that allow you to do this. And so it's very limited. It's hard to find a fiduciary that will allow this. I think what this is going to do is open that up, and eventually you can invest with someone like BMO or Schwab with your IRA or 401k, and you might also be able to have that account then invest in real estate or crypto as part of your retirement plan account.
Just to be clear, Eric, this executive order is just to order essentially the what is it, the Department of Labor or ERISA to reevaluate this. This isn't something that's going into effect in the immediate term.
Right. I think what you say immediate, and government takes a long time to move, but I don't know. Trump seems to be getting it to move faster than ever before. So this might be coming sooner than we think. He just seems to make these moves and enforce his will on these organizations, and they quickly bend to it. So while it's not immediately now, I would expect that this fall we get some kind of regulation on this that addresses this executive order and says, okay, here's now how we're going to enforce the rules. And then after that, from a competitive landscape, I think if fiduciaries offer these things, it'll be something that might be unique or sets them apart from fiduciaries that choose not to offer them. And so eventually, I think from a competitive landscape, you're going to get large institutions that will start offering these kind of alternative investments. And so you can have your what the government considers safe investments like stocks and mutual funds, but then you'll also be able to have these alternative investments, which includes things that are a little harder and maybe not as liquid and have a tougher market like crypto and real estate and hedge funds. They're going to offer some kind of array of those as well.
Yeah, it's interesting. It's a big potential shift, and we'll see where this shakes out. But I think if you're a business owner, this could be very interesting for you personally. It could also be something that your employees start asking about if they have interest, because this would have to be a change to your 401k plan if they wanted to start utilizing that.
Yeah, that's right. Eventually, if this does come about, you're going to see this communicated by the fiduciaries, by the investment houses. And so you're going to see more communications on this. Maybe your 401k provider right now will open up and say, hey, we have these new options right here. So information will come out, and I expect a couple months maybe that you start hearing more about this. I wouldn't think it's going to take any longer than that.
Okay. Well, stay tuned. We will obviously continue to update you as that changes. Let's talk about another big headline from this past week, Eric. Something kind of new. President Trump has sort of floated the idea of putting a price hike, sort of like, I guess, an export tariff on American made semiconductor chips sold to China. Maybe explain that a little bit, and then we can talk about what we think that might mean.
Yeah, I think it's more than floating an idea. I think the agreement's already been
Oh, is
reached.
it done? All right. Well, if it floats, yeah,
Yes,
it's already
right.
floating.
Yeah, it's a
It's
floated
not going to
idea.
sink.
So what's happening is it sounds like this agreement now is a very targeted agreement, and it's just right now to two companies, AMD and Nvidia, and those two companies that make these semiconductor chips. When they're sold to China, there's going to be a 15%. I guess I'll call it a fee. It's like a sales tax, but they're not calling it sales tax. The government's not calling it a tax; they're calling it a fee. So it's a 15% fee that's going to be paid to the US government. So it's going to act a lot like a sales tax in that you're going to take your gross proceeds, these two companies, from chips sold to China, and pay that into the United States government. This is really a kind of a very targeted new way of dealing with foreign countries and trade. So it's a unique proposition of saying to another country, hey, if you want some specific products from us, there's an exit toll to get those products to your country. That's very unique. It's even more unique that it's singling out two companies, AMD and Nvidia, in the agreement. So it's the large chip makers that they're singling out here, and it's only for sales to China. It's not for sales to other countries like Japan or India. This is just for sales to China right now. What it might mean is more of this could be coming on how Trump negotiates. These are like business deals he's doing with all these countries. This might be more indicative of what's going to come in the future on how Trump is going to punish or extract value out of countries for buying our goods. So not just tariffs, which are typically amounts coming in would be subject to a tariff. So something comes from China or India, it's subject to a tariff. coming into the United States. This is for outgoing products, and it's very targeted specifically right now to those two companies for sales to China.
And so, Eric, do you feel like this is part of a more broad tariff strategy, or is this a part of a strategy of we need to win the AI race, or is it a little bit of both?
Yeah, well, I think it's part we need to win the AI race, and so there's a toll tax to make it a little harder for China to get the chips. I actually think this is even bigger part of a strategy of Trump, creating in his mind. I think these are things that create wealth for America from assets that are not currently being utilized. So in this case, the asset is we make these great chips here and you got to get them. We're going to charge you an extra fee to get them out the door from America. Okay. This, I think, is his part of his overall strategy is the United States is not using its economic power that it has appropriately to raise wealth in the United States. And he believes that he's doing that right now. So these tariffs to come in, these are like access fees to the US market, the US market being an asset. We're going to leverage it by charging companies more to come into America and get and use, get access to our market. And then we're going to charge countries for getting stuff that we make that's really good, like these chips. And it's not necessarily how other countries or the United States in the past has used this tariff policy. This really is, I think, Trump saying there's an economic asset here in America in all these different areas, and we're going to make sure we extract value from that for America. Now, what they're going to do with this fee, I doubt they're going to use it to pay down debt. So they're going to use it for something,
Yeah.
whether it be tax cuts or a refund or a new program. I don't know. Maybe it'll go to debt, but I kind of doubt it.
The nice thing at least is we try to stay away from politics here, but at least we know that neither party really tries to pay down debt. So we don't have to wade into the political debate.
Right.
Eric, this is a really interesting and different change. I don't think I'm unveiling any important trade secrets to say we don't work with either Nvidia or AMD, so that we're not talking about them as clients. But think about this, if you can, with your crystal ball. Like, if you are a small, medium-sized business owner, what does this mean for you, if anything?
Right. Right now, I think what's interesting, it's more a point of interest than maybe affecting you directly, but I think the point of interest is, what industries now is really Trump going to get into and start doing more deals like this with countries? And will it impact you at some point? Don't know. But this new technique is kind of it's at least something to watch because I don't know that it's going to end here. I think it's starting here probably because it's so big, but there might be other target products that get targeted and other countries that get targeted based on what the wealth creation agenda is of Trump.
Right. It is something really new and something worth keeping an eye on. Thanks for explaining that and really boiling that down to something that even I can understand. Which reminds me, we're going to talk about we're going to head to our mailbag. And just a reminder, everybody, you can email us your questions at bizbeat@sva.com, or you can submit them on our website at sva.com/bizbeat. This week's question, and this is why I sort of mentioned that, because you might have to dumb this down certainly for me. The question is, with the gap between book and tax rules changing with OBBBA, what should business owners be doing to avoid surprises? So I'm thinking, Eric, you might need to explain what the questioner asks by the gap between book and tax rules changing.
Yeah. What they're getting at there is, a lot of businesses, they keep their books on, let's say, QuickBooks or some other accounting system, and they can print their own financial statement. That financial statement is the genesis of what gets reported on a tax return at the end of the year. But it is not just taking the financial statement and putting it on the tax return. The set of rules that you're using to create that financial statement within your QuickBooks or accounting system that you have is different than the set of tax rules that are used to calculate your income. So what OBBBA did is it changed some of those rules for tax purposes. So you're going to have a shift now of, hey, this is what I'm doing for book. This is what I have to do then for the tax return. And your tax accountant usually figures all this out and makes the changes. Because those rules changed, When you look at what you're doing for book income for the year and you look at your financial statements, you want to understand what those rules did and what is the impact going to be when you ultimately file your tax return. So if you're looking at your taxes now and trying to predict where they're going to be, this is where you want to be visiting your tax accountant and saying, hey, this is what I've got for book right now. And with what OBBBA changed, what am I looking at for my taxable income? So that between now and, the end of the year for sure is when you want to be having that conversation and looking at what the new rules did that change your book income into taxable income. So you know what to expect come April 15th.
And so what I'm inferring is that with OBBA, it's just affecting people in different ways. So they're not going to know. It's not just based on where you were last year. If you've got similar income, doesn't mean it's going to shake out the same.
That's right. That's right.
Okay. All right. Well, thank you for that, Eric. That's great. I didn't understand that question when it came through, so it was super helpful when you can break that down.
That's what we're here for.
That's what you're here for. I'm not sure what my purpose is, but that is it for this.
I literally mean on this planet. That's what I'm here for.
Okay. Well, yet again, I still don't know what my purpose is on this planet, much less at this company. But hey, at least, we do a podcast and that's unique. Nobody else does that. So anyway, thank you everybody for joining us. That is it for this week's episode of The Biz Beat by SVA. If you found today helpful, subscribe on Apple Podcasts, Spotify, or on YouTube. Don't forget to check out sva.com/OBBA, OBBBA, for the latest on the One Big Beautiful Bill. And if your association or if your peer group wants a custom presentation on the bill, we'd be happy to do it. Please reach out. And as always, what we share here is general in nature. Please talk with your CPA or advisor before making any major decisions. And if your CPA or advisor doesn't work at SVA, let's change that. Reach out to me and we can talk about how to make you a client. That's all for today. Thank you for joining us, and we'll see you next week on The Biz Beat by SVA.
Peace out.
It's The Biz Beat by SVA, breaking down the news of the day. From tax tips to business trends, smart insights from trusted friends. The Biz Beat by SVA.